Before we dive in, hit subscribe so you don't miss new episodes. If you find value, click the like button so we reach more people. Let's get started. Welcome to the Deep Dive. Today we're plunging into AI's profound impact on financial services, specifically looking at 2025 and beyond. We're going to unpack how artificial intelligence is reshaping, well, pretty much everything, from your daily transactions right up to the complex mechanics of global markets. We're using some really cutting-edge industry analysis here, folks, to bring you, hopefully, some surprising insights. And let me tell you, the projections are quite striking. AI-powered financial services. They're expected to generate over $1 trillion in annual value by 2027.
Wow.
Yeah? That's not just a big number. It really signals that AI isn't some, far-off experiment anymore. It's foundational. It's like the invisible nervous system, really, of modern finance. Understanding it is absolutely essential if you want to stay competitive.
Absolutely.
Whether you're a big institution or just, trying to manage your own money.
Indeed. And it's not just about doing things faster. It's about AI fundamentally enhancing decision-making, really optimizing risk assessment, and boosting operational efficiency across the whole spectrum. We're talking banking, complex investment management, insurance. It's everywhere. So throughout this deep dive, we'll explore its really impressive capabilities, sure, but also the limitations. And crucially, the risks that come with such powerful tech. Firms need to manage those proactively.
Okay, let's unpack this then. If AI is this new nervous system, where exactly are its impulses making the biggest waves in finance right now? Give us the sort of high-level view first. Where is it really being felt?
Well, like you said, it's not on the horizon anymore. It's already deeply embedded, right in the core functions of financial institutions. Front office, back office, it's there. Think of it maybe as a digital co-pilot. It's helping firms make faster, more accurate decisions, drastically cutting down errors, and ultimately improving outcomes for their clients. It's really pervasive.
A digital co-pilot. I like that. It sounds like a fundamental rewiring of the industry. So let's zoom in on some key applications, starting with one that always grabs headlines. Algorithmic trading. Here's where it gets really interesting for anyone watching the markets, right?
Absolutely. AI-driven trading systems are definitely at the forefront here. They're pushing the boundaries. They analyze these truly massive volumes of data, real-time historical market data, not just spotting trends, but identifying tiny, minuscule pricing inefficiencies, hidden patterns, things humans just couldn't process at scale.
Or impossible.
And the speed. It's incredible. These algorithms execute high-frequency trades within milliseconds. Milliseconds, that drastically cuts latency.
And for anyone not deep in HFT, that microsecond advantage, that's everything, isn't it?
It's the whole game. That tiny delay, the latency between seeing an opportunity and acting on it, AI basically collapses that time. It can mean the difference between a huge profit and, well, missing out completely. And what's truly remarkable is their dynamic strategy adjustment. They learn continuously from market moves, adapting their approach on the fly. It gives traders this massive competitive edge.
Wow. It's almost hard to wrap your head around that level of speed and data crunching.
Yeah.
But okay, beyond just making money, AI also plays this critical role in protecting it, right? Safeguarding assets. So how is AI being used in, say, risk management and fraud detection?
Yeah, this is an area where that analytical power really, really shines. It's like a relentless digital investigator. It's central in identifying and mitigating all sorts of risk, credit risk, operational risk, and of course, potential fraud. Machine learning models process just vast amounts of customer data, transaction patterns, even microeconomic indicators to flag anomalies or predict loan defaults much more accurately than the old traditional systems.
Much more accurate.
Definitely. And what's fascinating is the real-time capability in fraud detection. AI can spot these irregular behaviors, maybe an unusual login time, a strange location, or a sequence of transactions that look okay individually.
But together.
Exactly. Together, AI flags them as suspicious.
Yeah.
And it often does this as it's happening. So institutions can step in before big losses occur. It's a proactive defense layer that, frankly, human teams just can't match at that scale.
That real-time aspect is huge. It's like having a financial CSI always on duty. Speaking of real-time interactions, let's talk customer service, something many of us have already experienced. How's AI transforming that side beyond just, basic chatbots?
Right, chatbots were just the start. These AI-powered virtual assistants are evolving incredibly fast. They're becoming pretty standard now in many banks, fintech platforms. They don't just answer FAQs or reset passwords anymore. They're starting to proactively identify customer needs, maybe based on spending, predict potential issues before you even notice, guide you through complex tasks. The real power boost comes from natural language processing, NLP.
NLP, right. So it understands context, not just keywords.
Precisely. It gets the intent, sometimes even the emotion behind what a customer is saying, even if it's complex. That really improves service quality. And from the bank's side, it dramatically reduces the load on human support teams, frees them up for the really tricky, high-value problems.
Yeah, I can see that. It's definitely changing how we interact, often in subtle ways. So, okay, what does this all mean for your personal finances, our listeners' finances? How is AI impacting personalized financial services, moving beyond just generic advice?
This is where it gets really personal, shifting from just an institutional tool to directly impacting consumers like you and me. AI lets firms deliver genuinely customized financial advice. It's like having a hyper-personalized financial coach. It looks at your specific income, your spending habits, investment preferences, even your life goals, and offers tailored recommendations.
Tailored, okay.
Yeah. For example, robo-advisors use AI to suggest investment portfolios that match your specific risk tolerance and timeline. Perfectly aligned, but it goes further. Many banking apps now use AI for personalized budgeting tips, gentle saving nudges based on your habits, or real-time credit alerts, all designed for your unique situation. This kind of personalization leads to more engaged clients and hopefully better financial outcomes for individuals. It's about empowering you with insights relevant specifically to your journey.
That sounds incredibly useful, actually, redefining personalized advice.
Mm-hmm.
But, you know, finance is heavily regulated. All this personalization, this rapid change, it must create huge compliance challenges. How's AI helping with regulatory compliance and reporting in this complex global mess?
Oh, absolutely. Navigating that evolving regulatory landscape is, well, it's a massive undertaking for financial institutions. It's often overwhelming. AI helps compliance teams by automating a lot of the grunt work, things like continuous transaction monitoring for anti-money laundering, scanning documents quickly for compliance checks, automating regulatory reports across different countries.
Okay.
It has this amazing ability to track changing laws globally and apply rule-based logic to make sure the institution stays compliant. This doesn't just reduce the risk of big fines, it also cuts down massively on the time and resources traditionally spent managing these complex compliance tasks. It's a shift from reactive to almost predictive compliance.
Predictive compliance.
Interesting. Okay, that's a lot of ground covered. From microsecond trades to my personal budget.
Yeah.
You really see the sheer scale of AI's impact. So if we had to distill it down, what are the big picture, maybe the game-changing benefits AI is bringing to finance?
Right. I think there are 5 core benefits that really stand out, really transforming how finance operates. First, smarter decision-making. AI isn't just faster. It spots these incredibly complex correlations in huge data sets that, honestly, no human team could possibly connect in real time.
Right.
That changes the game for credit assessments, risk modeling, investment strategies.
Fundamentally changes it.
Second, a big jump in operational efficiency. Automated workflows streamline everything, back office stuff, loan approvals. It cuts errors, reduces approval times from days, maybe down to minutes.
Wow.
Third, reduce costs. Automating routine, labor-heavy tasks lets institutions cut overheads and, importantly, reallocate people to higher value work. Complex client relationships, innovation.
Right. Using human skills where they matter most. Exactly. Fourth, stronger fraud protection. That continuous real-time monitoring we talked about, it dramatically improves spotting anomalies and responding to cyber threats. It catches things humans often miss. And finally, scalability. AI systems are built to handle growth. Firms can manage way more transactions, more clients, without costs or headcount exploding proportionally. That enables huge expansion.
It's clear the advantages are massive: efficiency, innovation, scale we've just never seen before. But of course, it's never all smooth sailing, is it? What are some of the critical challenges, maybe the ethical considerations that firms are wrestling with as AI gets so deeply embedded?
Yeah, and this raises really important questions for firms and for individuals, because with all this power comes, big responsibilities and complexities. A major one is data privacy and security. AI systems need vast amounts of sensitive financial data, so you need incredibly robust safeguards to meet legal standards, ethical standards, protect consumers.
Non-negotiable.
Absolutely. Then there's the critical issue of algorithmic bias. This is a big one. If the data used to train these models is flawed or reflect historical biases, well, the AI can end up perpetuating or even amplifying those biases. That can lead to unfair outcomes in things like credit scoring or loan approvals. Addressing this needs constant vigilance, careful data curation.
That's tricky.
Very tricky. Another challenge is regulatory complexity. AI development moves so fast, often faster than regulators can keep up. That creates uncertainty for firms trying to stay compliant. It's a moving target.
Always playing catch up.
Right. And closely related is transparency and accountability. Many advanced AI models are kind of black boxes.
Black box problem, yeah.
You see the output, which might be brilliant, but explaining exactly how the AI reached that decision can be really difficult. That's a problem for audits, for explaining things to customers.
Makes sense.
And finally, there's the potential for over-reliance on automation. If you're not careful, depending too much on AI could erode essential human oversight, especially during, say, market stress or unexpected system errors. You still need human judgment at critical points.
That's a crucial balance to strike, isn't it? Innovation versus responsibility. So looking ahead then, what does this all really mean for the future of finance?
Well, what's fascinating, as we've discussed, is that AI in finance isn't some far-off future concept anymore. It is the fundamental force reshaping the entire sector right now, from algorithmic trading and risk assessment all the way to fraud detection and those personalized client services. AI is streamlining operations and unlocking totally new strategies. Institutions that are getting AI integration right, they're already seeing real gains. Faster decisions, cost savings, better risk management.
Tangible results.
Definitely. But as you rightly pointed out, these advantages come with those important caveats: managing bias, ensuring data privacy, navigating the black box issue. These are serious concerns needing proactive management. So firms really have to strike that crucial balance, keep innovating relentlessly, but maintain unwavering accountability. That means investing in transparent systems, setting up strong governance, and crucially, ensuring there's still proper human oversight involved. The future of finance is, without a doubt, intelligent, adaptive, and data-driven. And those who really champion thoughtful AI integration today, they're the ones who will define that future.
A powerful thought to leave us with, and maybe one for you, the listener, to ponder. As AI continues this transformation of finance, how might your relationship with banks, with investments, even your own spending habits evolve? What new financial possibilities or perhaps challenges might you encounter that maybe we haven't even conceived of yet? Something to think about long after this deep dive wraps up. Thanks for listening. If this helped or made you think, like it shows this content matters. And tap subscribe if you haven't yet. See you next time.